A very good evening, guys. We are back after a break of few days, and as I mentioned earlier, you all have taken the sheets. We continue with FA only. As I told you, FA is the most time-consuming subject. FM and costing don't take much time, so we continue with FA only. And the next chapter, what I am taking is accounting for hire purchase. A very simple chapter. Journal entries are there, along with some calculations, and in few cases, you have to also prepare ledger account. But wherever there is ledger account, the base is of journal only. It's a very interesting chapter, okay, and I'll make it much interesting for you all. Okay? First, what do you mean by hire purchase? You have to do accounting for hire purchase, but before that, you should know what is the meaning of hire purchase. Hire purchase is nothing but it is installment facility. Hire purchase means it's an agreement where when you buy an asset, either you are not in a position to make the full payment, or you are in a position to make a full payment but you don't want to make it. You want the relief of installment. So what happens? You buy an asset on installment basis. You must be seeing TV ads, na? EMI. What is EMI? Equated monthly installments. That means you buy anything and you pay the money in installments. That is the concept of accounting for hire purchase. So hire purchase means buying an asset and making the payment in installments. Now, before we proceed to the main chapter where the calculation is there and the journal entries, before that, you should know certain accounting terms or certain important words which are necessary for this chapter. Okay? Let's take one by one. The first thing what you need to know. The first thing what you need to know is cash price. What do you mean by cash price? Listen, cash price is the price which you pay for buying an asset, subject to you are making full payment. Cash price is the price, it is the original price of the asset where you make the full payment, take the asset. Say for example, you are buying a car which is costing 10 lakh rupees. Okay? The cost of the car is 10 lakhs. Pay 10 lakhs, take the car. That is the cash price. So it is the original price derived of the asset where if you make the full payment, take the car. That is called as cash price. Next, after cash price. Now, as I told you, cash price means pay full 10 lakhs, take the asset. Now the next option for which we are doing this chapter, accounting for hire purchase. You opt for installment facility. Now what happens, if you opt for installment facility now, you have to pay a certain amount as advance. If you opt for installment facility, you have to pay certain amount as advance. That is called as down payment. That is called as down payment. Down payment is nothing but advance payment made. You say, I am taking this car, I don't have money, I want installment facility for 4 years. I will pay the money over a period of 4 years. So they say, okay, fine. You will have to enter into an agreement which is called as hire purchase agreement, and initially you have to pay something. So what the car, say for example you are buying a car only. The car company will say, okay, no problem. You make a down payment of 2 lakhs. The car company will say, you make a down payment of 2 lakhs, 10 minus 2, the remaining 8 lakhs you can pay over a period of 4 years. The remaining 8 lakhs you can make the payment over a period of 4 years. So that is my down payment. Okay? Now, next, installment. Installment means the money which you are supposed to pay over a period of years. In the example I told you that out of 10 lakhs on the spot you have paid 2 lakhs. Baki ka 8 lakhs you will have to pay over a period of years. So see what will happen. End of year 1, year 2, year 3, year 4. You pay 2 lakhs each. Okay? That's installment. Now listen. But when you pay installment, see, today if you make the full payment, it is 10 lakhs. If you make the payment over a period of years, it cannot be 10 lakhs. So if you are delaying the payment, you will be charged interest. So what will happen? Installment will be principal plus interest. Installment will be principal plus interest. So listen, I'm just giving you hypothetical figures. Say for example, first year ka interest is 50,000. Second year ka interest is 30,000. Third year ka interest is 20,000. Fourth year ka interest is 10. So my installment for first year will be 2 lakh plus 50, 250. 2 lakh plus 30, 230. 220 and 210. So this is called as my installment. So installment means principal plus interest. It's very basic, na? Today if you pay full amount, it is 10 lakh. So if you are opting for installment, obviously the company will charge you interest, otherwise they are going to lose out. So you opt for installment facility. Every year you have to pay additional amount of interest. Here I gave you the amount. In the sums we will see how to calculate the interest. Very interesting calculation it is. Got it? So installment means the money which you pay at the end of each year or at the end of each 6 months. That will be principal plus interest. Cash price, full payment price, down payment, token money or advance payment, installment, principal plus interest, and the last thing is higher purchase price. That is your total price. Higher purchase price is nothing but cash price plus interest. Higher purchase price is cash price plus interest. See now, cash price is how much? 10 lakh. Interest is how much? Calculate the interest total. First year ka 50, 30, 80, 1 lakh. 1 lakh 10,000. So my higher purchase price becomes 1110. So higher purchase price is nothing but the total price, which will be cash price plus interest. Higher purchase price is the total price, which will be cash price plus interest. See, it's very basic, na? Today if you make full payment, it is 10 lakhs. So if I am paying over a period of 4 years, you will have to pay certain amount extra. So that is 1110. So 11 lakh 10,000 is the total amount paid. So that is cash price plus interest. Getting it? Cash price plus interest. That gives you 11 lakh 10,000. Clear with this, guys? Okay. So cash price, full payment price, make the full payment, take the car, that's your cash price. If you go for installment facility, down payment, certain amount to be paid, that is advance. Then you have installment, which will be principal plus interest, the amount which you are supposed to pay every year. And the next is higher purchase price, that will be cash price plus interest. These terms you are supposed to remember. So higher purchase is nothing but taking installment facility. You will have to enter into a higher purchase agreement. And remember, one important thing for higher purchase, you take the asset on installment facility, it's fine. But you become the legal owner of the asset only when you make the full payment. Till the time you don't make the full payment, you don't become the legal owner. Keep that point in mind. So higher purchase may, you become the legal owner only when the final installment is paid. Now, as far as accounting is concerned, you are buying the asset, so you are the buyer, and the car company or any company from which you are buying an asset, any asset, that company becomes the seller. You have accounting in the books of buyer as well as seller. Initially, we will be doing majority sums based on buyer only. Towards the end of the chapter, there will be sums based on seller. It's very simple. You have to apply the concept. I'll make it very easy for you. I'll make it very, very logical for you. Trust me. Okay? Now see, whether you do accounting in the books of buyer or seller, whether you do only journal or you do journal and ledger or you do only ledger, every sum, whether books of buyer, whether books of seller, whether journal, whether ledger, whether journal come ledger, there has to be a certain calculation made for which I will make a statement in my way. Your college must have showed you a different way. Don't worry, you do as per my way. Every college accepts that. It is there in few authors' books also. And that statement made, we will see how to calculate the hire purchase price, how to calculate the installment. That is a very, very interesting part of this chapter. Clear? So this is the concept of the chapter. As I told you, in every sum, where whatever you are doing, whether you are passing entries or preparing ledger in the books of buyer or in the books of seller, that statement has to be prepared in each and every sum. Then there are 6 journal entries in the books of buyer. All 6 theory I have given you. I will logically explain you each and every journal entry in this particular sum. I am doing one sum today. That sum, it won't be possible to take it in one video because it will become too large. So I will split it in 2 videos. I'll take the sum, I will do the calculations, I'll prepare the table, and there's a working note for depreciation. I'll show that. And the journal entries, I will take it in the next video. Okay? Now, take out the sheet. First, what I am doing is question number 19. First, I am doing is question number 19. Understand the table very carefully. I'll send you the picture of this also. Understand this table very carefully. Okay, let's read the sum first. P company purchased a machine on 1st Jan 11 on hire purchase system. Necessary details are given below. Cash price 60,000. Amount paid on signing the agreement 20,000. First installment 18, second installment 16, last installment 13,860. So it is 3 installments, and you are buying on 1st Jan 11. So installment will be paid at the end of the first year, second year and third year. Rate of interest 10% per annum. Depreciation 20% on cash price. Depreciation is always on the cash price only. Here they have mentioned, even if not mentioned, depreciation is always on cash price. Okay? Next. By reducing balance method. You all know FYGC ka basic. When we provide depreciation, there are 2 methods. When we provide depreciation, there are 2 methods. One is straight line method and the other is reducing balance method. They can ask you by both the ways. Either they can ask you reducing or they will ask you straight line. Here they have mentioned straight line. Draft journal entries in the books of P company. Now remember, P company is the buyer. So as I mentioned initially, I am doing sums based on buyer. Around 75% to 80% sums are based on buyer only with ledger or with journal. Okay? Now as I told you, first you'll have to prepare a statement because see, we don't know how much is the interest. We know the installment. What I told you, installment is principal plus interest. So I should know of the total amount of installment, what is the breakup of principal and interest. Okay? So for that, we will prepare a statement called as analysis of payment. We will prepare a statement called as analysis of payment. Understand now what will be the columns. First column will be opening cash price. Opening balance of cash. First we'll put date first. Of course, people avoid date, but it's better we put it. First we'll put date. After date, opening balance, or you can just say opening cash price. You can avoid a date also, but it's better we put it. Opening cash price. Then you have principal. Then you have interest. Then you have installment. And then last, closing cash price. Okay? I'll make the calculation very simple for you. Understand? In this video, I'll finish this table. Journal entries, I will take it in the next video. Okay? So see, what are your columns? Date, opening cash price, principal, interest, installment and closing cash price. Okay? So let's take one by one. When are you buying the asset? I am buying the asset on 1st Jan 11. So, first date, 1st Jan 11. What is the cash price of the asset? The cash price of the asset is 60,000. So write in the opening cash price column 60,000. Now listen. Amount paid on signing the agreement. What is that? Down payment. Amount paid on signing the agreement. The day when you sign the agreement, you are making the payment. So that is nothing but advance payment. That you are paying as of today. So listen. So that becomes a part of your principal payment, because out of 60 you are paying. You are paying on the spot today. 20,000 you are paying today. So what you are making today, there is no delayed payment now. So when you make the payment on the same day, there cannot be any interest. So my installment is what? 20 plus 0, that is 20. So down payment will be treated as principal as well as the interest on the day when you make the payment. Down payment will be treated as principal as well as installment when you make the payment. Okay? Now, closing cash price. How you will get closing cash price? Opening cash price is 60. Closing will be opening minus principal. So 60 minus 20, that gives you 40,000. If you want, I'll write it for the first sum. So 60 minus 20. Closing cash price is opening minus principal. Getting a chime on the first day, 1st Jan 11. Cash price is 60. On the spot, I am making 20,000 ka payment. Interest is not there. Installment is 20. So 20 plus 0 gives me 20. And my closing will be opening minus principal. Now see, the remaining payment I am going to make in 3 installments. First annual installment. Now you are buying the car on 1st Jan 11. So my installment will be, next installment will be on the last day of 2011. On the last day of 2011, I will pay. Now what you will do first? 1st Jan ke baad the next payment is on 31st December. Closing of the previous. How we used to do in FIFO weighted average? Closing of previous will be opening of the current. Same way, closing of 1st Jan will become opening on 31st December. Okay? Closing of 1st Jan becomes opening of 31st December. Now, have they given you the first installment? Yes. How much is my first annual installment? My first annual installment is 18,000. My first annual installment is 18. Now see what I told you. Installment includes what? Principal plus interest. Now here see. I purchased on 1st Jan. So what I made the payment on 1st Jan, on that there is no interest. Now I am paying on 31st December 18,000. So this 18 will include interest. Now see, interest will always be calculated on the opening balance. So my interest for this year will be 40,000 ka 10%. My interest for this year will be 40,000 ka 10%, that is 4,000. 40,000 ka 10%, that is 4,000. Clear? Always on the opening balance. Yahan pe interest did not come because you are making down payment. Now see what I told you. Principal plus interest is installment. Principal plus interest is installment. So principal will be what? I know the installment. So if this plus this is this, can I say this minus this will give me this? So 18 minus 4. So my principal becomes 14,000. So now check. 14 plus 4 gives me 18,000. So this means out of my first year ka installment of 18,000, 4,000 is interest and principal is 14. Out of my first year ka installment of 18,000, 14,000 is principal and 4,000 is interest. Clear? Closing. Opening, that is 40,000 minus principal, that is 14. So 40 minus 14, that gives you 26. I'll repeat. Opening is 40, installment is given 18,000, take interest will be, which will be opening balance का 10%. So 40,000 का 10%, 4,000. 18 minus 4 is 14. So my installment of 18 includes 14,000 for principal and 4 for interest. Closing will be opening minus principal. First installment, 31st December 11. Next, after 1 year, 31st December 12. You can leave a line. 26 first you carry forward here. 26. What is my second installment amount given? Second installment amount is 16,000. Again, this 16 will include principal plus interest. Now, what I told you, interest will be on opening balance. 26,000 ka 10%. 26,000 ka 10% gives you 2,600. 26,000 ka 10% gives you 2,600. So what will be my principal? Principal plus interest is installment. So 16,000 minus 2,600. So 13,400 will be my principal. 13,400 will be my principal. Getting it? Now closing. Again the same thing. 26,000 minus 13,400. So that will give you 12,600. Getting it now? Opening minus principal. One more third installment last. 31st December 30. Bring forward. 12,600. Now listen, be careful. When you are in the last year now, what I am explaining in the next 1 minute, you will do that only for the last year. Now what is my last year installment? 13,860. Last year installment is 13,860. When you are in the last year, avoid percentage. The reason is last year ka interest will be your balancing figure. When you are in the last year, avoid percentage because the last year ka interest will be your balancing figure. So what you will do? Whatever is the opening, same make it as principal. This you will do only for the last year. Whatever is your opening, make same as principal. So now what will happen? This minus this, 13,860 minus 12,600 will give you 12,60. Fortunately, it is coming opening at 10%, but it won't be possible always. I repeat, this you will do only for the last year. Whatever is your opening, keep the same as principal. Whatever is your opening, keep the same as principal. So principal and opening are same. So my interest will be installment minus principal. That will give you 12,60. This you will do only for last year. Otherwise, what you will do? Opening ka 10% is interest. Installment minus interest is principal. In the last year, opening and principal will be the same, and the difference will come. Clear with this? Don't worry. First two sums you will face a little bit problem. Slow jayega. Don't worry. This will be repeated in every sum. There are 3 ways in which you have to do this table. Initially 2-3 days I will do the first way, then slowly I will show you the other ways also how to do. Okay, table is same, method of calculation changes. Now what you will do? Take the total of these 3 columns: principal, interest and installment. This is 60. I wrote it without calculating. The reason is principal column ka total always has to be opening balance of cash price. So if you check, the total of all 4 has to be 60. Interest 4,000 plus 2.6 plus 1260, 7,860, and installment it will be 67,860. How? What I told you, principal plus interest is installment. So this plus interest is installment. So 67,860 is my total installment. Cash price 60,000, down payment 20, each year ka installment, each year ka interest, each year ka principal. Total cash price, total interest, installment. This is my total hire purchase price. So If you buy the asset by paying full cash, you have to pay 60,000. If you want installment facility, you will pay 67,860. Full payment at a stroke 60,000. Installment facility चाहिए तो 67,860. Getting it? Don't worry. This calculation, understand the explanation. Rewind forward करके देखो, you'll get it. If not, don't worry. It is going to be repeated again and again. ठीक है? I'll go very slow with this calculation for the first few sums. Now listen. As I told you, initially we are doing sums in the books of buyer. Buyer is purchasing an asset. Now when you buy an asset or a fixed asset, we always provide depreciation. You all have done in final accounts. Every year depre ka adjustment. FYGC you all have done depre ka chapter also. So in the books of buyer, since you are buying an asset, there will be depreciation. As I told you, depreciation can be either fixed or straight line. Fixed straight line, or it will be reducing balance or WDV. See what they have mentioned. They have told reducing installment. Matlab WDV, reducing method. So after the table, you have to prepare working note ka depreciation. I will prepare depre ka working note. I will break this video and I will take it in the next video. Okay? Next. Working note. Calculation of depreciation. Working note. Calculation of depreciation. Now see, they have mentioned depreciation 20% on cash price. Even if not, first year it is always on the cash price. So see what you will do. What is my cash price? 60,000. So write it. Cash price as on 1st Jan 11, 60,000. This is reducing installment. So every year ka depre changes. If it is fixed, it will be every year 60,000 ka 20%. Rate is 20%, correct? Now, my first year ka depre will be less depreciation at the rate of 20%. 60,000 ka 20% gives you 12,000. So 60 minus 12, I get 48,000. 60 minus 12, I get 48. This becomes my WDV as on 1st Jan 12. This becomes my WDV as on 1st Jan 12. WDV is what? Written down value method. See, if it was fixed, every year ka depre was 12, but this is reducing balance, so I am doing it for 3 years, 11, 12, 13. So my depre for all the 3 years will differ. Now what I do? Second year. Less depreciation at the rate of 20%. 48,000 ka 20% gives me 9,600. See, again I am repeating. If it was straight line, there was no need to do all this. It is 12,000 fixed for all the 3 years. Next class mein, we will see depre straight line. So 48 minus 9,600, that is 38,400. Okay? This is my WDV as on 1st Jan 13. Again, less depreciation at the rate of 20%. 38,400 ka 20%, that is 7680. Take the difference, 3720. So my WDV as on 1st Jan 14 is 30,720. Getting it? So every year ka opening balance ka 20%. So my first year ka depre is 12, second year ka depre 9.6, third year ka depre 7680. 12,000, 9.6, 7680. Now listen very carefully. This statement and this will now go in the journal. So if you make a mistake here, your journal goes wrong, because your entire journal will come from this calculation. Your entire journal will come from this calculation. Okay? So be careful. This is important because this will have an impact on journal. And every year you have to prepare depreciation, so you need these figures of depreciation. But this is the most important point of this chapter. the most important point of this chapter. Okay? Now let me check whether I can continue in this video or no. It's 30 minutes. 30. I cannot continue. बहुत बड़ा हो जाएगा. So I am winding up this video, and the remaining part I am taking in the next video. Okay? Okay guys, back to the journal entries. As I told you, everything is based on this table. So I have rubbed the earlier mat, I have taken the picture, I will send you the picture. And now we start with the journal entries. Journal entries, if nothing is mentioned, you have to do it for 3 years. So first year I am doing it here. The second and the third I will do on the right side, left side of the board. When I finish the first year, I will change the angle of the mobile. Okay? Now listen very carefully. There are 6 entries to be passed for the first year in the books of bio. Total 6 entries, not more than that. I am doing all the entries, 6 entries, and the second and the third entry may 2 entries. Second and the third year may a couple of entries will reduce. But let's see the first year entry. Understand very logically. I am making it very simple. I am going very slow. That is the reason I discontinued the first video so that I can take this at a stretch. Okay? Now see. First, you are buying an asset. Which is the asset here? Machine. The asset here is machine. So you are buying a machinery. On which day? 1st Jan 11. Understand the concept of these 6 entries. Once you get this, it's very simple. On 1st Jan 11, I am buying an asset which is machinery. Machinery is coming. So my first thing is, since I am buying machinery, my first entry will be machinery account debit. It will be my cash price. What is my cash price? 60,000. So I will debit the asset by 60,000. Always the asset will be debited by the cash price, that is 60,000. Now this is hire purchase. You are not making full payment of 60. Because if you are making full payment of 60, there is no point of doing all this. So this is on credit. You will credit the vendor, that is the supplier from whom you are buying the asset. Have they given you the name? No. They have not given you the name of the vendor, so we will use the word vendor. So to vendor's account 60,000. Had they told you, had they given you the name of the vendor, we would have written the name of the vendor. Okay? So machinery is coming in. So I debit machinery, asset is coming in, and I am not making the full payment. It is a credit transaction. So I credit the creditor, which in this chapter is called as vendor. Okay? Narration being machinery purchased. Being machinery purchased. Okay? 1st Jan 11. Now see. Are you making any other payment on 1st Jan? Yes, I am making the down payment. So on the same day, I will pass the second entry for down payment. What is my down payment? 20,000. I am making payment. I am making payment, money goes out. So because I am making payment, money goes out, I will credit cash bank. Making payment to whom? The person from whom I bought the asset. Who is that person? Vendor. So I am making the payment to the vendor. Vendor is the receiver. So I will debit vendor's account by 20,000. Making payment, money goes out. So I will credit cash bank. So to cash bank 20. So my entry becomes vendor's account debit to cash bank. Again I am repeating. I am making the payment to the vendor. Vendor is the receiver. Vendor is the receiver. So I debit vendor's account by 20,000. You are making the payment. Money goes out. So to cash bank. So vendor I am making the payment. He is the receiver. So I debit vendor's account and payment done. So to cash bank. Narration. B. Down payment made. Narration. B. down payment made. Clear? Next. These two are the entries on 1st Jan, purchase and down payment. Now I'll come to the next entry, 31st December. 31st December will be my next entry, third entry. Now see, this is hire purchase. You have opted for installment facility. So if you have opted for installment facility, you are liable to pay interest. If you have opted for installment facility, you are liable to pay interest. I am in my first year. I am the buyer. We are doing in the books of buyer. I am the buyer. For me, interest is an expense. Interest is an expense, so I will debit interest. So what I do? I am doing only for the first year. Interest I have to pay, so it is an expense, so I will debit interest. 31st December. Now see what is 31st December 11. 31st December 11. First year ka interest is how much? 4,000. What I told you, all entries will come from the table amount. So see, my first year ka interest is 4,000. So I will debit interest by 4,000. This interest is payable to whom? The vendor. So I will credit vendor's account by 4,000. So my third entry will be interest due. It is an expense. I am the buyer. If I am the seller, it's an income. That will be towards the end of the chapter. I am the buyer. For me, interest is an expense. So I debit interest account, and it is the vendor from whom I am purchasing. So I will credit vendor's account. Narration being interest due. Okay? Narration being interest due. Getting it now? It is an expense, so I debit interest, and it is payable to the vendor, so I credit vendor. Now what you are doing? On 30, every year I am supposed to pay installment. What is my 31st December ka installment? 18,000. I will pay. So my next entry will be for first installment pay. I will pay the installment to whom? I will pay the installment to the vendor. Vendor is the receiver. So what I will do? Again, I will debit vendor's account. What I am paying is first year ka installment. How much is my first year ka installment? 18,000. So I will debit vendor's account by 18,000, and I am making the payment. So to cash bank 80. Same entry of down payment. Only thing is this was for down payment, this was for installment. But in both the cases, I am making the payment due to the vendors, so it will be vendors to cash bank. Okay, so I am paying the installment to the vendor. Vendor is the receiver, so I debit vendors, and payment is made so to cash bank. B. Installment for the year paid. Being installment for the year paid. Clear with this? Being installment for the year paid. Purchase of asset, down payment, interest due, installment paid. Next, you are buying the asset. I have used it for the full year. First Jan ko I purchased, so I have used it for the entire 2011. What I will do? I will provide depreciation. You will have done final accounts by adjusting entries. What is my first year ka depreciation? My first year ka depreciation is 12,000. See, this is first year, second year, third year. So I have to record these figures. So depre for me, it is an expense. So what I do? I am the buyer. I am using the asset. For me, it is an expense. So I debit depreciation. That is 12,000. First year ka debit because I am in my first year. And what are you depreciating? Machinery. Machinery ka value reduces. So I credit machinery. So it is depreciation to machinery, that is 12,000. Narration. B. depreciation provided for the year. B, depreciation provided for the year. Getting it now? Clear? And now the last entry. As I told you, there are 6 entries. This is the 6th one. Now, what is this? Tell me, looking at these 5 entries, in these 5 entries, which are the expenses? In these 5 entries, which are the expenses? Interest, machinery is an asset. Vendor is a personal account. Interest 4,000. Debris 12. So can I say interest and depreciation? These two are the expenses. Final accounts ka adjusting and closing entries. At the end of the year, all expenses and income have to be transferred to P&L. So interest I have debited, I will transfer it to P&L. See, when you pay interest, final accounts में P&L के debit में आता है ना, and even depreciation P&L के debit में. Manufacturing में it was manufacturing के debit, but normally it goes on the debit side of P&L. So at the time of incurring, I debited. Now I will transfer to P&L. So what will happen? Interest I debited, now I will credit. Debris I debited, now I will credit. And the total 4 plus 12, 16,000 I will transfer to P&L. So my entry will be profit and loss account debit 16,000 to interest account 4,000 to depreciation. Okay? 4 for interest, 12 for debris. So total I will transfer to P&L debit 16,000. Okay? B, interest and depreciation provided. Being interest and depreciation, transferred to P&L. Getting it up? At the end of the day, all expenses and incomes have to be transferred to P&L. So these are the 6 entries for the first year. I repeat: purchase, so asset to vendor; down payment made, so vendor to cash bank; interest due, interest to vendor; installment paid, vendor to cash bank; depreciation provided, debris to asset, here the asset is machinery; and end may interest and debris transfer to P&L. In the exam, mostly they'll ask you only 1 year ka journal, but when they say 5 journal entries, we do it for all the years. So what we'll do? We will do for 2nd and 3rd year without narration. Exam may mostly they should be asking you 1st year only, but then too, because if ledger account is there, we need the data for all the 3 years, because journal for 3 years it becomes too large, but I'll show you in few sums all the years kind of. Okay, so now I will change the angle. I will pass the entries for the 2nd and 3rd year without narration. Narration is the same, or if for space is there, okay, I'll write the narration for the first sum. Now listen very carefully. Now we are going in the 2nd and the 3rd year. Every year I am not buying the asset. Asset is bought only for 1 year. So purchase of asset ka entry will not come in the future now. It comes only for the first year. Down payment. Down payment is also made only once. Interest I have to pay every year. Installment I have to pay every year. Debris I have to provide every year. So this also has to be every year. So when I go in the 2nd and the 3rd year, the first 2 entries will not come. Basic na? You are not going to buy asset every year. एक बार purchase किया तो purchase का entry will be for first year, and down payment is made at the time of purchase, so that will be also for the first year. So 2nd and the 3rd year में the first 2 entries will not come. These 4 entries will come with the relevant amount. Okay? I'll just change the angle of the mobile so that you can see the left side of the board. Okay? 31st December 11. Now I take next. 31st December 12. Again, I have to repeat this. Interest. What is my interest for the 2nd year? 2,600. Payable to the vendor. I hope it is clear, na? Yeah. Payable to the vendor. So interest is an expense. So I will debit interest account The second year का interest, that is 2,600 payable to the vendor. So to vendors account 2,600. So it will be interest debit 2,600 to vendors account 2,600 being interest due. Being interest due. See, the same 4 entries will be repeated with the respective amount. Next, installment. First year का हो गया 18,000. What is my second year का installment? 16. Paying to the vendor. Vendor is the receiver. So I debit vendor's account and money going out. So cash bank. So my next entry becomes vendor's account debit 16,000 to cash bank 60. Okay. Being installment of the year, or you can say being installment. Okay. So first year का installment 18, second year का installment 16. Same entries, just the amount of the second year will come. Then what? Debris. What is my second year का debris? 9.6. See, first year का debris was 12, second year का debris 9.6. So same entry. Depreciation is an expense. So I debit depreciation 9,600 and I am depreciating machinery. So to machinery account 9,600. Narration B, depreciation for the year provided. Being depreciation for the year provided. And then what you have to do? Interest and debris transfer to P&L. 2,600 का interest, 9,600 का debris. So 9 and 2, 11. 12,200 I will transfer to P&L. So profit and loss account debit 12,200 to interest account 2,600 and to depreciation 9.6. B, interest and depreciation transferred to P&L. Being interest and debris transferred to P&L. And on the same basis, I pass the same 4 entries for the last year with the relevant amount. Getting the logic now? So purchase and down payment will come only in the first year. Interest due, installment of the year, debris, and transfer of depreciation and interest to P&L will be repeated. Okay, let's do for the last year. Again, interest. What is my last year ka interest? From the table, 1260. So interest account debit 1260 payable to the vendor. So to vendor 1260 being interest due. Installment. Last year ka installment 13,860. So 31st December I'll make the payment. So vendor debit 13,860 to cash bank 13,860 being installment of the year paid. Then depreciation, third year ka debris 7,680. See, this was first year, second year, now third year. So third year ka debris, we are depreciating machinery. So depreciation account debit 7680 to machinery 7680 being depreciation for the year profit. And the last year transfer debris and interest to P&L 1260 of interest and 7680 of debris. So profit and loss account debit to interest to debris. 7 and 1 8, 680 and 1260 plus 7680, 8940. Interest is 1260 and debris 7680 being interest and depreciation for the year provided. Okay guys, clear? As I told you, very rare that they'll ask you all the 3 years. Normally journal they ask you only for 1 year or 2 years because this table and debris ka working has to be there. But we have done everything. Just understand carefully this table ka calculation, debris ka working note. Entries again I'll repeat. First is purchase of assets, second is down payment made, interest due, installment paid, provision of debris and transfer debris and interest to P&L. Listen to the video carefully, same basis where you have to do second and the third year. Understand, see the video carefully and don't worry, next class may the same thing will be repeated again, but see to it you get the concept clear. If not, see the next 2 videos which will come. After that still you are not able to get, please connect with me, I am available. Okay? So that's it. I'll continue tomorrow. Take care guys. Good night.